Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, December 7th. We're going to take a look at gold here and a setup that we talked about for all our members last night, and that played out really well throughout the night session and through today. That was a bearish setup in gold. Now, the reason we were bearish gold and what we were looking for to happen is we had this breakdown through support, okay, from the previous pivot lows here. We broke through the support on Tuesday. Wednesday, yesterday, we had an inside bar and set up a bear flag. Now we had bearish momentum coming into this, had that inside bar set up yesterday, and what we talked about in last night's video was if we broke that bar's low, that triggers the flag, tells you to go short, and your stop goes above yesterday's high. So you would have been short from about 64 with your stop at about 72, about an $800 contract stop, and right now you'd be up about just under $2,000 per contractor, or you'd be up an 8-point risk and a 16-point profit as of this point. So working out pretty good. 2-to-1 reward risk ratio. Your first target's hit, you'd be out half your position and break even stop at a minimum. But this trade does have potential to continue to run, and the reason it has potential is because our weeklies are breaking out of a nice compression pattern this week that we've been in compression the past 2 months. We finally broke out this week, and now it's starting to move. So we could see it continue to move not only the rest of this week, but in through next week as well. But overall, great job for those of you that took the short. Worked out really well. If you don't believe me that I talked about this for the members, I hope you don't, because then you can go sign up for membership and check the recording from last night's members only video. So you can start a trial and go do that. The link for the trial is in the description below. But that's it for today. Great job, everybody that took the short there, and also great job for those of you that have been holding on to the bub spread with us, that we established that position yesterday. Played out perfectly. If you go watch the recording from the morning market recap this morning, we said at 8 a.m. watch for bonds to go higher, form a bearish divergence on the 240s, then turn around and come down and break lower, and they have done exactly what we're looking for them to do. You can see here's 240-minute bond chart. You can see this morning we broke higher, turned around, formed this bearish divergence here, and came right back down. And the reason we were looking for that in bonds is because the nature of bonds, they do not typically go from straight up bullish momentum to reverse on a dime. Now they do occasionally, like you can see here, we went from straight bearish, turned around, went right back up. But if there's not news driving it, normally it's going to have a momentum shift like we did here, where we form the divergence, weakening momentum, and then turn and come back down. But we established the bond trade, the bub spread yesterday. That worked out perfectly, and we closed it today for about 400 some change per spread. So great job there. But that's it for today. I'll see you in the trading room bright and early tomorrow morning. Have a great afternoon. Don't forget to like and subscribe. And until next time, happy trading.